Hello and welcome back to another video here at FiscalVoyage. My name is Felix, and today's video we're going to talk about a previous video that I made on Skyworks Solutions stock. I made a video on May 7th, and that day the company had a price about $104, $106. We'll look into that in this video, and we're going to determine if Skyworks Solution is still a good buy at today's market price, and we're going to see how since that video, how did the company perform and where's it going and what our analysts are expecting from Skyworks Solutions stock. But in the meantime, before we get started, if you're new to the channel, make sure to hit that subscribe button, as well as check out my free ebook in the description below. Video that I made on Skyworks Solutions, you can see here on May 7th. During this time period, the company had a price of $106.97. I had a fair price of about 103, so it was overvalued almost 3%. But even with the slight overvaluation, I gave it a buy. And the reason for the buy, if we go back to the original of the fundamentals, you can see here revenue was growing nicely, net income was growing nicely, operating income growing very nicely, earnings growing 20% in percentage growth. The future outlook, CFRA is projecting 18% growth. My dividend drill return model, 14% annual rate of return growth. The forward PE was higher than the 5-year average, but overall the company growth was looking very good. So that's why I gave it a buy recommendation at a $106.97 on May 7th. So we go to Google Finance and look at the Skyworks ticker symbol. You can see here now it's at $152, so it's much more higher than the $106 that I originally made that video. So that was on May 5th over here. So you can see the company has gone up almost 45% or 46% since that video. So that's tremendous growth, almost half your money return in just basically 3-5 months. So that's very great, tremendous growth. So now we're going to look at to see, because of this high growth, is the company still worth a buy at current prices? So first, let's look at the Skyworks solution in Morningstar. Morningstar gives it a 2-star rating. So it's a sell recommendation based on the Morningstar star ratings. You can see here fair price is about $117, and last close of yesterday price is $151. It has a narrow moat, so that's positive there. The balance sheet for this company is outstanding. They basically have no debt. The current ratio outstanding 5.8. Overall balance sheet very healthy. Very great balance sheet for this company. Price to sales, if we look at some of the fundamentals here, price to sell is higher than the 5-year average, almost double. Price to earnings high as well, 33 versus the 5-year average of 18. Price to forward earnings high as well versus the 5-year average. So these are all indicators that the company may be overvalued. However, the PEG ratio does look good at 1.54, but it's still higher than the 1.10 for the 5-year average. Earnings yields is low as well at 3 versus the 5.7% 5-year average. If we look at the Yahoo estimates, Yahoo as well expects an average price of $147 and currently is at $152. Some of the good news is next 5 years earnings are expected to grow about 12.65%, so that's still real good earnings growth. The only problem that I see so far is the price, the valuation. So if we look at the fast graph for this company, you can see here earnings has been growing very, very nicely for the past 10-15 years. You can see here in 2017 129% growth, 2007 129% growth, 2008 48% growth, 50% growth in 2011, and the most recent last year they had a down year of 15% decrease in earnings, and this year is expected to be 6%. But next year and the following year, you can see here 20% and 18% earnings growth. So this is what's really driving this price so much higher than what it should be. If we shorten this time period to about 8 years, you can see here the company likes to be a normal multiple around 14 or 15. We'll use 15 as a the normal multiple, or what's a fair value price. And you can see here the company has currently, based on FastCry, a P of 25, so it's much higher than the average for the past few years. And of course, this increase in price was because the expectation of nice double-digit earnings growth. You can see here 20% for 2021 and 18% for 2022. So this is what definitely drove the price up. With the 5G thing coming out, everyone's 5G, 5G, 5G. The dividend yield is decent at 1.32. It's not great. It's okay. But the earnings yield is very low at 3.87, and the company actually increased the dividend 14% a few months ago. So that's very positive news. And you can see here the dividends have been growing very nicely throughout the years. And in 2020, like I mentioned, they increased the dividend about 14%. You can see here for the past 5-6 years, the company total annualized rate of return has been 18%. I don't see that happening at current price because of the valuation. When I made that video, it was about this time period. You can see here, from here, you had a nice, decent rate of return, about 7.5%. But right now, as yesterday closing price, you can see you might have a potential loss. This is why valuation is so important, because of the risk. The lower the valuation, based on earnings and growth potential, the better chance of risk you have. I'm not saying this company is not great. This is a great company, great balance sheet. You can see here only 4% long-term debt to cap ratio, but the valuation is high. So right now I have Skyworks basically like a hold or even a sell. If you were lucky enough to purchase around this time period or when I made that video, I think now is a good time to maybe either sell it or just continue holding, but invest the dividend somewhere else, buy some other undervalued companies. So there you have it. Those are my thoughts on Skyworks Solutions at today's price. It looks to be overvalued. Like I said, I think it's a solid hold or even a sell at current prices. But if you do continue to hold it, there's no issue with that. I would recommend to move the dividend somewhere else and reinvest the dividend in another undervalued company. But right now, Skyworks is a hold or a sell at current prices. So since that run up of about almost 45%, the stock's been doing great. The company is amazing. Very low, like I said, very low balance, great balance sheet, low debt. But overall, the valuation is what's turning me off of this company at current prices. But I hope you enjoyed this video. And again, if you're new to the channel, make sure to hit that subscribe button, as well as check out my free ebook in the description below. I'm going to be making another video later today, so look out for that one next.